What's going on, everybody? Bitcoin nearly reached 100K. It hit a new all-time high yesterday, slightly above 98,000, and the spot Bitcoin ETFs made it over 100 billion in net asset value here. And the US Bitcoin ETFs have seen $29 billion in net flows this year. You might be asking, how is it 100 billion in assets under management? Because Bitcoin has been going up, that is why. But regardless, $29 billion in net flows is a massive accomplishment. And this 100 billion in net asset value has been achieved in only 10 months since they went live. And in the last 3 days alone, the Bitcoin ETFs have seen $1.8 billion of inflows. And watch out, because down the road, there are going to be potential listings for Solana, Ripple, and Hedera. There are applications for ETFs based on these other digital assets, as said by Nate Gerasi. And we did have news that Microstrategy's market cap has reached $100 billion the other day. And looking at Bitcoin's chart, we've been following this pattern since early September. It was established early September, and then we've been basically filling it out, following this support that we've bounced off 2 times and finding resistance at this resistance. Right now we are out of it, but we have done this before, so wait to see where this candle closes. Do we close back inside this pattern? Regardless, I do think we are going to at least test 100 before we cool down. At some point we will cool down. There will be a cool down phase. Q4 isn't nothing but up, but it is a lot of up. And we still have about a month and a couple weeks left of Q4. And as Bitcoin keeps its momentum, keeps its gains, I'd say the average over this quarter has definitely ticked up higher. We're probably at an average of 75,000 Bitcoin over this Q4 so far, which is looking great for the Bitcoin miners. A lot of people have been pessimistic about them lately, and for good reason. They haven't been performing all that well in recent months, but over the cycle I expect many to continue to outperform Bitcoin, as they still are. Even after these pullback periods that they've experienced, many have outperformed and are outperforming Bitcoin still from the bear market lows. It is definitely a different story cycle to cycle, and this is why you don't hold them into bear markets. You don't hold the Bitcoin miners cycle to cycle. You want to trim towards the end. You want to be out of the Bitcoin miners at the end. They're like leverage plays on Bitcoin. When Bitcoin tanks, they're going to tank more. When Bitcoin rips, they're going to rip more. Except for lately, am I right? But at some point, they will whipsaw back up. Market will catch up and realize that these Bitcoin miners are getting back to profitability. Kind of like back before the halving. When the Bitcoin miners started posting profitability, the hype started drawing in. Many of these companies started doubling up out of nowhere. And then the halving came in and took these rewards in half. Brought them back to unprofitability. We don't have that to worry about this time. They are about to be profitable for multiple months, multiple quarters. For a good part of 2025, we will see these Bitcoin miners pulling profitability, unless Bitcoin, of course, tanks and goes back under 70,000s, goes back into the 50s or something, which I highly doubt. I do think once we establish 100K, that will become sort of a support for this cycle. Of course, until we revisit it in next crypto winter. But Bitcoin is setting up the Bitcoin miners for a fantastic Q4, as long as it continues what it's doing, as long as it doesn't just absolutely tank out of nowhere, which I would not expect. I do expect Q4 is going to be great for the Bitcoin miners, and that's exactly what's happening so far. So far, so good. Now, Marathon is one Bitcoin miner that has been doing pretty well lately. We do have a couple of zones ahead that I'm watching for. 27 is going to be an important zone in my opinion. The psychological 30, of course, and then 34. Once we break these, the sky's the limit. One thing to be aware of with Mara is we do have a gap to potentially worry about, but one thing is, in this time last cycle, let me show you guys, last cycle we did have a bunch of these little gaps and they did not get filled until next crypto winter. That might happen this time, and this is right around the same period of time. This is December of 2020, another halving year. Q4 of 2020, we're in Q4 of 2024, which is a halving year as well. So these gaps did not get filled until back in the next crypto winter, guys. This might be the case for this gap here. If it's not, take advantage. This is a great chance to buy some Marathon in an overall bull market. And let me remove this circle just so you can see this clear gap right here. Gap in like the 16s, we can revisit it. I would doubt it at this point personally that we would revisit this gap here. It might turn out to be like these gaps that didn't get revisited until the bear market. So in 2026 potentially. One thing about Mara is they aren't expecting a profitable quarter in Q4. The ones that have reported so far are saying unprofitability for Q4. I think that isn't going to be the case if Bitcoin keeps its gains. When a lot of these companies gave this forward guidance, we were a little earlier into Q4. Bitcoin was a little lower in price. They were probably playing it safe as well, just in case Bitcoin pulls back. They don't want to expect profitability and miss it. So profitability right now, the miners are on the fence in my opinion. I think they're going to see profitability. In terms of revenue, MARA expects a record revenue, 173 million, better than they've ever seen, even better than before the halving. Before the halving, they had 182 expected quarter and they reported 165. So this could be another, record quarter after we just had rewards get things cut in half. We're seeing those record revenues again, and then soon after that comes profitability. We've seen this before. And this doesn't let me go any farther back, but you'll notice that, once they start getting those quarters to rise up again, quarters before this started coming down, this is where the bear market started. At the peak, we started seeing amazing numbers, and then those revenues started coming down. They started rising back up again. And that's when the excitement came. That's when they got to profitability soon after. When Bitcoin rose enough in price to get them to profitability. Bitcoin here is getting the miners back to profitability. So if Wall Street wants to keep them down for a little while, that's perfectly fine. In the end, they will shoot up with Bitcoin. In the end, they are completely tied to Bitcoin. These miners aren't just going to sit here while Bitcoin continues its rally for the rest of the cycle. That is not going to happen. Next up, I want to talk briefly about MicroStrategy. It has been running a lot. It's been doing fantastic. I wouldn't bet against it. I think it's going to continue higher over the cycle. I would be cautious here, but I do think DCAing is good for it. I do think over the rest of the cycle, it will perform very good. One thing about MicroStrategy is it's trading 3 times the value of its Bitcoin. So there is definitely a premium to it. But think about this, if it continues to have a premium over this bull run and Bitcoin goes up in price, why wouldn't it demand that premium? If we're expecting Bitcoin to continue higher, I do think MicroStrategy deserves a premium, but at some point it won't deserve a premium. Say we're getting into late 2025 and it's at a 4x premium, Bitcoin starts pulling back, what happens to MicroStrategy? This is another stock, just like the Bitcoin miners. You don't want to be in this when we come to the next crypto winter. You want to take your profits and be out. And while I wouldn't be crazy enough to short MicroStrategy here, Citron Research is. And here's their Twitter post. How did this one age? Nearly 4 years ago to the date, Citron was the first to tell readers that MicroStrategy was the ultimate way to invest in Bitcoin, setting a $700 target. Fast forward and MicroStrategy has skyrocketed to over 5,000. This is split adjusted. Kudos to Michael Saylor for his visionary Bitcoin strategy. Now, with Bitcoin investing becoming easier than ever, ETFs, Coinbase, of course, Robinhood stock. Besides the ETFs, these have been out when MicroStrategy was out. MicroStrategy's volume has completely detached from Bitcoin fundamentals. While Citron remains bullish on Bitcoin, we've hedged with a short MicroStrategy position. Much respect to Saylor, but even he must know MicroStrategy is overheated. Literally every single comment is going against Citron Research here. Literally every single comment is laughing at Citron Research. And while I'm not crazy enough to go short, I do know that stocks will go in both directions. And when literally every single person is bullish on a stock like this, and there is not one bear in sight, that usually makes me a little cautious. And you guys might remember the other day I mentioned this gap, and MicroStrategy was lower in price. MicroStrategy, I was wrong so far. MicroStrategy keeps going up. There is still a gap in the 280s. Perhaps we revisit it next cycle, but it is something to be aware of. One thing we're also looking at is some bearish divergences on the 4-hour. We have the RSI coming down, but we had the price rise more. Remember guys, these other times we have seen this did mark the top. For example, right here, we saw RSI cool down and we topped out. Right here, we saw again the same thing, RSI cool down, topping out, RSI divergence. And also, of course, bullish divergence. We had price dropping, but we had the RSI basically leveled out here, basically double bottomed here while the price was drastically dropping. This is a bullish divergence, and this did pretty much mark the bottom. But just be careful, sometimes the market will react to these divergences, sometimes it won't care and it'll just keep going. But when you are overextended like this, usually these divergences are a good indicator, at least of a short-term pullback. And here on the 1 hour, it is becoming clear on more and more time frames that there are bearish divergences here. So just be cautious. In my opinion, MicroStrategy is still a good DCA over the cycle. My opinion also is look for the dips. Buy on opportune moments. Don't chase it on a 20% up day. Same with the Bitcoin miners. And Bitcoin miners are going up 20%. Don't buy on days like that. Buy on the red days because we will get them. In the overall bull market, there will be dips along the way. There will be speed bumps, and those are great opportunities to load up, to buy. While we're in this overall Bitcoin bull run in the 4-year cycle, we still have 6 months, maybe more left. Remember, when everyone is bullish, usually it's time to be a little cautious. But also remember that sometimes the market doesn't have to make sense. Sometimes the market can keep being irrational longer than you can remain solvent. But anyways, how are you guys feeling about the market today? How are you feeling about the Bitcoin miners? It's crazy to think how much more expensive Bitcoin is getting now. It's almost disappointing. It's almost sad. We knew this was coming, but it's kind of a sad feeling when you think about buying Bitcoin. And for you to buy one Bitcoin, you have to kick down nearly 6 figures now instead of like 20,000, 30,000 like it was not that long ago. This is how people feel cycle to cycle to cycle. Imagine a few cycles ago being able to buy Bitcoin under $1,000. And imagine a few cycles from now having to buy Bitcoin hundreds of thousands of dollars, if not millions. Because of Bitcoin's capped supply at 21 million, because of Wall Street's acceptance now, it is not going anywhere. It is game over if you're betting against Bitcoin, because Bitcoin will do what it has always done and it will follow its cycle. It is simple as supply and demand, and it can't get any better than Bitcoin. Thanks as always for watching, guys, and I'll see you on the next one.